Welcome back to the channel. All right, today we should have an interesting one once again. We are going to go over the Bitcoin chart and a little bit of news about Bitcoin that I think is pretty interesting. We are also going to go over the EGLD chart, talk about what's been going on with EGLD and farming and kind of how most people tend to be farming, at least the larger holders of EGLD, is based on all the information we're seeing on Twitter. Next, we will talk about MEX. We're going to look at the MEX chart and we're going to go over it and we're going to see what we see. We're going to try to identify what's a possibility here, even though MEX is going to be a little difficult because there's not much data. So let's get started. There's a lot to go over. Make sure you like, make sure you subscribe, make sure you stick around until the end because we got another little piece of information. All right, so let's get moving. All right, first off, we are going to switch over to the view where you can actually see the Bitcoin chart. Okay, let's take a look here. Which one do we want to do? We'll do this view. So the first thing about Bitcoin, this is something that I pointed out on Twitter. I think I may have mentioned that in my last video, but pretty much what we've been seeing with Bitcoin is that over the course of 2021, it's been putting in a very large ascending triangle. Now, these ascending triangles tend to break bullish quite strong with a move with a move that roughly would match the highest peak to the bottom of the descending triangle within it. So this tells us that at the same time frame of growth, we're looking at the potential of breaking out of this triangle starting in January of 2022. Early January, we should be breaking out unless we break out earlier. Now, if we do break out around that time and we have a massive run, as this triangle would suggest, something very similar to what we saw recently with EGLD. Before it had its major run, it was putting in a very similar ascending triangle. Now, if we do have that run, then we're looking to hit around 136,000 by the end of January, then fall back somewhere around 100,000, so take a bit of a dip there, and then reach a full top sometime in May, which would be around 213,000. Now, highly speculative. This is very, very speculative. This is just based on the pattern. We need to take into account fundamentals, and well, the fundamentals are very strong. The fundamentals would tell us that this is entirely possible, but we need to take into account market sentiment. That's really what's been driving price movement lately, and the market sentiment has been somewhat bearish, so we've been seeing this small consolidation. Now, when you look at this on the longer time frame, though, the interesting thing is this consolidation appears to be just a minor blip in the overall trend. We seem to be seeing here another run up like we saw over here until we have a bounce. That's what it looks like. We don't have enough information to know for sure yet. We need a few more weeks worth of data. This is a weekly chart. So as we start seeing a few more weeks worth of data, we will get a better idea of whether or not this type of breakout is going to occur. So are we going to break 100,000 by the end of December? It's possible, but it's unlikely because according to this even, we would really go from around the 60K mark all the way up to the 80K mark around the early weeks of January, like the first 2 weeks. So that doesn't mean that we would break 100K by January itself, but it does look like it could be somewhat within the early January timeframe. That's kind of what we're looking at on the weekly chart. The other interesting thing about the weekly is that we are not overextended where we are now. You'll see when we hit all-time highs previously at this level at around 62K, we were highly overextended on the weekly RSI. Then we had this drop down to around 30K, right around 28 actually, or 29. And the RSI came back down to the 45 level. That's really good. The 45 level is a good area of support to prove that you're still in bullish momentum. Well, now what we've seen is as we've had these rises and dips, when we hit the last all-time high or the actual all-time high at around 68, 69K, well, we weren't even overextended on the weekly. We had just started to hit the 70 level. So there's actually a lot more room to move. And now coming back down on the weekly chart, we're at around 57, which is like a great area. That's where you want to be before a massive run, because this tells me that if we do have a run up to like the 100K mark, well, that might overextend us. right? And that's what we want to see. And then after that, you would have a correction kind of like this, back down to the 100K level. Once you're at around 136, you drop down to around 100K or 98K, and that brings you back to the 45 level. So everything kind of fits in when you look at this larger pattern, but we really have to see what's going on in the world and in the market to get a better idea of this. So the first thing that's happening in the world that's really impacting everything is the new variant of the virus that we will not name, because apparently you can get banned on YouTube for saying it. So we're not going to say it, but that variant apparently is scaring the markets. And it makes no sense, because if you think about it, since the time that everything occurred, we first had a liquidity crisis, right? That was in March 2021. We had the liquidity type crisis, March 2020. We had the liquidity crisis. And then after that, central banks and the Fed started printing money. And that really started happening globally, that we started seeing money printing. Well, the money printing was pumping liquidity into the markets, and it was propping up all the markets. Well, the fact of the matter is, if anything like this happens again, they're going to have no choice but to keep printing money. Because if you have another liquidity crisis and you're not printing money, well, everything's just going to crash. And no government's going to let that happen if they have the ability to print unlimited money. It doesn't make sense. So in reality, the fear right now is not very logical, right? Even if the Fed tells you that they're going to start increasing the tapering and buying back of assets, well, that's just going to bring the markets down. That's why the markets are selling off. But at the end of the day, when those numbers start going down, the administrations in power are not going to want their presidency or their administration to have that on their record. So what are they going to do? They're going to fight to print more money, do more stimulus, and then those things will more than likely get approved. As they do, we'll see more money printing. We'll likely see more liquidity being pumped into markets, continuing to prop them up. Now, that's if this variant turns out to be, bad. We really don't know anything yet. It's all speculative selling right now, which tells me that it's unlikely that this is going to hold. I think what we're going to see is asset prices, security prices continue to rise. And at the same time, we're going to see the dollar get devalued as these things rise. So inflation would keep going up and the asset prices would keep going up, because right now they can't just stop pumping liquidity in. They can't do it. If they did, inflation would be way too high. So they have to do it very, very slowly. And with a new variant, they might not be able to. It might delay the whole thing of keeping interest rates at zero and pumping liquidity into the market. So keep that in mind. That's kind of what I'm seeing on a global scale. Now let's take a look at something that I saw that I found pretty interesting. All right, so this article is on Cointelegraph. Now this article basically, ironically, let me see if I can zoom in, if that's a little bit better. No, we are zoomed in. Is that the zoom? No. Whatever, we'll just stay here. So basically what this says is the Central Bank of Indonesia is considering launching a digital rupee to fight, I don't know if I said that right, rupee, to fight against cryptocurrencies like Bitcoin. The Bank of Indonesia Assistant Governor Judah Agung said at a recent parliamentary meeting. So this is what she said. This is a quote from the assistant governor of the Bank of Indonesia. It says, a central bank digital currency would be one of the tools to fight crypto. We assume that people would find CBDCs more credible than crypto. A CBDC would be part of an effort to address the use of crypto in financial transactions. Okay? Now, this is pretty funny. It says here that they think that a CBDC would be a tool to fight against crypto and people would find it more credible. Well, the fact of the matter is a CBDC just gives governments and central banks easier access to print money, right? To transfer and to print money. That's what it does. Does it change the value of any cryptocurrency? No, it actually makes those cryptocurrencies easier to buy, because if you have a digital currency, it's more than likely that that digital currency can be converted into another digital currency much easier. So bridges and things would likely appear where you could convert CBDCs, assuming they're not isolated environments that they're created in. So we'll have to see what happens, but I think that this logic that, and I don't think the Bank of Indonesia is the only one who has this logic. I think all government banks have this logic, and they are governments are having these thoughts because they want to look at a way to capture the value going into cryptocurrencies. The fact of the matter is the reason that value is going into cryptocurrencies is because the global population is slowly losing faith in fiat because it's being devalued everywhere. Think about Venezuela. If Venezuela had a central bank digital currency, it would have inflated along with the rest of the hyperinflation. It wouldn't have mattered. Bitcoin would have still been the better investment, or multitude of available cryptos that have performed very well, though many would be more risky than Bitcoin because they have a much larger downside, but they have a much larger upside. So keep that in mind. This also, I found, I don't even know really what to think of this, but it says the news comes shortly after the National Ulema Council, MUI, Indonesia's top Islamic scholarly body, reportedly found cryptocurrencies like Bitcoin to be haram or forbidden by the tenets of Islam. The East Java branch of one of the MIU previously issued a statement deeming the use of cryptocurrency haram in late October. So what we're seeing here is actually using religion in order to isolate people from going to cryptocurrencies. That's the length they're going to. I mean, let's face it, if cryptocurrencies are haram, if they are forbidden by the tenets of Islam, well then so is gold, because cryptocurrency, or Bitcoin in particular, is just a better version of gold. It's taking the analog of gold and making it digital, right? It's created by human beings. It's very, very interesting that this would be religiously frowned upon. So I thought that was really interesting. It shows you the fear that banks have of Bitcoin and its growth, because they are starting to realize that they cannot keep value, transfer value, and grow value as much as Bitcoin and cryptocurrencies. This is very interesting stuff, and I think we're going to be seeing more on it, so keep it in mind. Let's move on to the next thing that I thought was very interesting. This is an article, actually, not an article, but it's a thread on Twitter by Dylan Leclerc. I recommend following him. His Twitter is DYLANLECLAIR _ at Dylan Leclerc. Okay? At Dylan Leclerc _ Very smart guy. He posts a lot of good information here. So it says here, over the last 7 days, the Bitcoin network. Okay, so you have a good view. All right. Over the last 7 days, the Bitcoin network transferred an average of $95,142 of value for every $1 worth of fees. The median transaction saw $751 of value transferred for every $1 worth of fees. It's the most efficient monetary settlement network the world has ever seen, and it is absolutely true. We scroll down a little bit. It says here, with an average of $95,142 transferred for every $1 of fees over the last week, final settlement costs amounted to a minuscule 0.00105% of total value transfer, which was $451.3 billion. Not to mention the immutable nature of the final settlement, because you're going directly from person to person, wallet to wallet. Next, we see here, this is why BTC and ETH shouldn't be included in the same conversation. One is an immutable monetary settlement network, which is secured by absolutely scarce asset. He's referring to Bitcoin. The other is a smart contracts protocol that isn't purely purpose-built for a value of settlement and storage. Okay, next it says, and basically what he's saying is that ETH transaction volume versus fees are far different, right? The Bitcoin transaction volume versus fees seems to be that the fees remain low even if the volume is high. But for Ethereum, it's very different. The volume gets higher, or doesn't even need to get super high, but the fees continue to grow. So you see that Ethereum is much less usable for a store of value or transaction than, well, store value is debatable, but at least for transactions, it's much less usable because the gas fees are just psychotic. Then it says here, BTC and ETH's on-chain transfer volume divided by total fees throughout their history. With ETH, as more value is accrued into the token since launch, the settlement efficiency of the network has declined, while various smart contract competitor chains have risen. Okay, it says here, full analysis from today's daily total dive. So this is his link to his full analysis. You can check that out if you want. Now, what I find interesting about this is he's kind of making the case on Bitcoin versus ETH, but at the same time, what he doesn't realize is that he's also making the case for Elrond versus ETH. Elrond basically has the store of value capabilities that Bitcoin does. It also has the transaction settlements that Bitcoin does. Actually, better. The fees are lower on Elrond. The only difference, what it does not have, is the full-scale decentralization and the size of the network that Bitcoin does. That nothing has. So in reality, if you just adapt this very, very slightly to Elrond versus ETH, you start to see that Elrond is far superior to ETH when it comes to transaction settlement. And then on top of that, you see that it also has all the features that ETH has at a fraction of the cost because of those transaction settlements. And you start to see that Ethereum is significantly lacking. All it really has is the network effect. So we'll have to see where Ethereum goes and what they really do to develop and to fix the issues that are plaguing its growth right now. But I don't think that's really going to plague its value growth. I think what's going to happen is ETH will continue to have a crazy network effect. So the value will keep going up just because people are buying, not so much because it's providing better functionality than its competitors. I think what you're going to see is the growth of ETH will reach a top and then it'll slowly start to drop, or it will start to reduce its growth. And at that time, you're going to start seeing other blockchains similar to Elrond start growing very, very fast. And then the competition will be between what is better than Ethereum. And I think right now, as a layer one technology, Elrond is probably the best that you could find. Now, we'll have to see if things change, but right now, I don't see any reason why anyone would want to use Ethereum over Elrond, other than the fact that there are just a lot more people creating things on Ethereum, right? But the cost of getting those goods just because of transactions is psychotic. So this is a very interesting thing. You just have to take it and adapt it a little bit. I mean, it definitely proves that Bitcoin is better than Ethereum as far as settlement transactions, but I think it also proves that Elrond is better than Ethereum. So let's take that and move on to, well, let's take another look at the Bitcoin chart real quick and see if there's anything else we see here before we move on. We've gone 15 minutes on Bitcoin, so it's going to be time to move on because we've got a lot of other stuff to look at today. So the only other thing that I really noticed that's interesting on the 4-hour chart is that we are in an area now where we are getting constricted between our moving averages. This is a deciding factor, right? The first thing I see that I don't really like is that Bitcoin went up to around, I'd say 59,000, close to 60K, about 59,200 just yesterday. And what ended up happening is that we dropped back below the moving averages here. So we're looking at a few key moving averages, right? Our 20 has dropped all the way to the bottom. Then after that, we have our 50. After that, we have our 100 and our 200. So they've kind of reversed order, meaning you've had a bunch of death crosses on the 4-hour chart. Now what we're seeing is that we're actually getting resistance on the 200 exponential moving average and on the 100 exponential moving average. Not a great sign. What you want to see is you want to see an upward move breaking above the 200 exponential, and when you see that, or even the 100 exponential, and sustaining it. If we sustain it, that's going to tell us we're likely in a price reversal. So keep an eye on that. It's looking like if it's going to happen, it's going to happen soon. Otherwise, we're likely going to drop again and possibly come down to the 52K level, which is our upper trend line on the larger ascending triangle that I showed you on the weekly. So keep an eye on that. If we look at the 4-hour RSI is looking okay, but we really need to see if we're going to get support at the 45 level. Last time we fell below it and continued to dip. If we fall below it again, we're going to continue to dip. So we want to see if we're going to get support there. Next, we'll move on to the daily chart. So on the daily chart, we can see a little bit more clearly what's going on. Our moving averages haven't death crossed yet, but they're getting close. The 20 is starting to get to the 100. So if the 20 exponential moving average starts to death cross with the 100, it's not a good sign, and a lot of people are going to take that as a very scary sign, and likely traders may start selling because of that. So keep an eye on that. That's an interesting thing to see with the moving averages. What we really want to see is kind of what we talked about on the 4-hour. We want to see a move up above these moving averages. We want to get back to this area here. That's going to tell us bullish momentum has started. Now, it's entirely possible that we do dip back down to the 52, 53K level and start that uptrend around this area, which is the base of our uptrend line or our ascending triangle base. As we start that, it may put us in a position to have a breakout by the time we reach this area. I mean, it's entirely likely that we hit this and then we come up to around 61,000. So maybe something like this, right? If we come down from here and we hit this area and then bounce up, you could see that we do some trading like this, right? We move like this until, I didn't mean to do that interval thing, until we finally have a breakout. Now, if something like this were to occur, it would fulfill this ascending triangle and put us in a position where we are ready for a springboard breakout towards the end of the apex of this ascending triangle. So keep that in mind too. Right now, it's a very, very deciding time. You don't want to see Bitcoin drop too far below the 52K level, because if you do, well, then you're looking at around 47 to 48K as support. So we want to keep a close eye on these things. And honestly, it's not unheard of to see a drop like this just due to fear. Like if we drop down to 47K, you might just see a very quick V-shaped recovery and come back into the exact same pattern. So this is also possible, but if it is, that means that we may get opportunities to buy at around 47, 48. So keep it in mind, a lot of things could happen right now. Nothing is definitive, but we just have to watch the charts and see what they tell us. This is what it's telling us now. Upwards targets, you already know my targets. I mean, I'm looking to see Bitcoin really have that major breakout towards the beginning to mid-January. We're looking January 8th through 10th. If by January 10th we're hitting 75,000, well then it's a good possibility that this chart is going to play out to be true. And if it does play out to be true, then we're looking at really a massive uptrend into this regression channel, which would serve as resistance and take us up to the 100 to mid 100K level. So keep it in mind, that's kind of what we're looking at right now for longer term Bitcoin. Shorter term, impossible to see exactly what's going to happen, but I would just say good buy targets for me right now are anywhere between 50 to 55K. Unless I see us going below that, I'm not going to place any orders below that unless I just really want to hold on to that cash because it may never trigger. So we'll see how that goes. Let's move on to EGLD and take a look at what's happening there. So we're going to move on to the EGLD chart. When we look at the EGLD chart, we were looking at this a couple days ago, and I pointed out on Twitter a couple of key areas. So I'm going to point those out to you one more time. What I had told you on the 4-hour is that if we dropped below the 100 exponential moving average and we didn't hold it as support, it's likely that we're going to go down to around 360. So 360 is still a possibility. I want you to look at this zone here where 360 is. The first thing that you see here is that the 200 exponential moving average on the 4-hour has come right up to that level, making it a much more likely level for us to bottom on. So that's around $360. Now, we also see that this zone covers a larger area, right? We have our Fibonacci retracement line at around 355, and then we also have the bottom of this zone at around 345. So why is 345 the bottom of this zone? Well, the reason this is the bottom of this zone is because if we zoom out a bit, what you start seeing is that this is an area that we had a good amount of volume. So we look at that as an area that will likely get support. So I've extended the support range to cover that entire area. But if we were to fall below that, well, then it's very possible that we take a dip back to the regression line. In reality, this entire area here should be a support area, and this should be maximum support, right? Around 300 to 320, because we had a lot more trading volume there. More than likely, a lot more buying would happen there. But it's very possible that if we start going down to 360, 350, a lot of people are going to buy there because it's going to be a massive discount to where we were when we maxed out and hit the all-time high of around 545. I mean, if we go down, let's just take a look at percentages real quick to see really what's happened. Right now, we are down about 30% from all-time high. If we go down to the bottom of this zone, that would be 36%. And if we do touch this major support zone, that's anywhere from 40 to 42% of the total from the all-time high to that support zone. So these are terrific buy areas because it's still the early stages of the DEX. And if it can go up to this level during initial release just by locking value, well, as you start having more trading pairs offered and more people coming in, they're going to have to buy EGLD to participate. They're going to have to buy MEX to participate. And then they're going to want to buy different assets that are available, starting with HoloRide, because that's going to be the soonest coming. So very interesting. If we look here, what I'm looking at is really this fib line to be the major support. That's around 355. So if we start dropping here, I would look at 355 as being a key area. That's super key. Even this regression line that you see going up to the right, very key. This entire range from like 310 to 360 is super key, and how we interact with it is very key. If we get support on this upper zone and we start bouncing up, well, that's a very good sign. That's an extremely bullish sign. It means that people are buying up very early. If we drop below that and get support at the regression channel, well, that's also a good sign, but it's not as bullish because it tells us that on our way up, we may have a tougher time breaking through these resistance areas, right? These ones here. So I don't necessarily want to see us fall down to like the 330 level. Now, if we were to drop down to 320, 319 and we immediately come back up, so let's say we do something like this. Let's say we have a big fear dip down to here, and then we immediately come back up and go back up to the 390, 400 level. This is incredibly bullish, even if you take the drop, because this means that massive buying would be occurring at around the 300 to 350 level. And you really want to see that. So there's a multitude of ways this can play out. And after you hit a new all-time high, viewing how that consolidation plays out is very, very interesting. Right now, it seems to be that we are still in a bearish trend. That's what it seems to be. Everything supports that on the 4-hour. We're not holding the 45 level. We are dropping below into an area without as much volume, right? So it's more easy to fall in these areas. So we really need to see, where does the support come in? Does it come in here? Does it come in here where we didn't have much trading before? So that's really key, to see which areas here get the support, to get an idea of where your bounce is going to be. That's when we'll really have a better clue of what our support and resistance levels are. And one thing to keep in mind is that as the 20 exponential keeps moving down, it is becoming a resistance. So right now, our first resistance is at around 400. That's where the 20 exponential is. That's where also a major amount of volume resistance would be. So that's kind of the first resistance area, is 400. If we were to just do a reversal like this and break above 400 and then get support on it, incredibly bullish, because then what you're doing is you're putting in a big giant symmetrical triangle. Right? We haven't confirmed that yet. We haven't confirmed a symmetrical triangle because we need a bounce to a new trend line in order to confirm that. Right now, I would not consider what we are seeing as a symmetrical triangle, because we don't have any support areas other than this, and it's unconfirmed because we just fell below it. So we really need to see what's going to happen over the next couple of days to get a better idea of whether or not we are putting in that consolidation. Because if we are putting in a continuation pattern right here, well, that means that we're more than likely going to continue to the upside. So that's very interesting. We need to keep an eye on that. Pretty much what I'm looking at now for downside buy targets are anywhere from 345 to 360. Those are the key buy areas right now. It is this this support zone. That support zone is key, but I think it's unlikely right now that we drop below 355. 355 to 360 seems to be a great area to buy. It's possible that we will just come and touch the 360 level and then bounce off of it. So kind of what I'm looking at now. We need more information to really tell us what's going to happen, but that's what it's looking like now. A reversal could happen at any time, so you may not get to buy at those levels, but if you do, if it does drop there, it's going to be a good buy area, and I'll be buying there as well. Okay, now for resistance, assuming we do have a move to the upside. Well, our first major resistance, like I told you, is 400. And it's not even major because we just broke below it. So we'll have to see really how much resistance is there, because if we start an uptrend, people might just FOMO in and buy, even though they were waiting for lower prices, because they're like, uh-oh, I'm going to miss the boat. So keep an eye on that. We could see a break above 400. And if we do, well, then our next resistance area really is 425. If we were to break above 425 and 450, so 400, 425, 450, those are like the three key levels, and you can see those lines. One is this red line, it's the automated support line, then is the fib line, and then is the yellow line that I put there at around 450 as the resistance. Now, if we hit that 450 level, you can expect major resistance between 450 and 480. I think it's more likely that we move up in this area much easier. We should have light resistance at these targets, but if we really go back into the bullish uptrend, it wouldn't surprise me if we do a move like that and then consolidate back down to here, and that would put in a really big symmetrical triangle. This seems like a likely scenario to me, because basically what you would end up with is a large continuation pattern, and then you would be looking for a breakout somewhere in mid-December, and that might actually correlate perfectly with when we might see HoloRide get listed on the DEX. I'm not sure, but this seems to be possible. It seems to be likely, and in order for this to be confirmed, we're going to need to see support somewhere between 375 and 380 to get that bottom trend line moving up. Right now, we haven't seen that. When we seem to have the start of a symmetrical triangle, but you cannot confirm it until you have the move up and you have enough activity to actually set these lines. These lines are just speculation right now. It's what I'm looking at. If this is the case, then I think that there's going to be some good buy opportunities, maybe one or two more times. And then after that, we're going to have a move out of here. Now, let's look a little bit further into the future. Let's assume that EGLD does make a big move out of here, right? Let's say that we see something like this. We see a move up to around 450, a move back down to around 400, and then after that, we have a breakout at this apex. Well, then there's a good chance that our next resistance is going to be at the all-time high, somewhere around anywhere from 500 to 545 will start hitting resistance. That's going to tell us, are we putting in a bigger continuation pattern? What exactly is happening? And a lot of that's also going to be dependent on the volume we see once Holoride is listed on the DEX. Once we have that information, we'll have a better idea, but I do suspect that after Holoride is listed, we hit a new all-time high, and then we start a much longer consolidation, anywhere from 20 to 30% consolidation, because that would support the fact that now you've had people come in, you've had the influx, you've had people take profits, you're consolidating and revaluing as you move forward. That's not to suggest that we won't have further increases down the road, but it is to suggest that that might be the time for accumulation to occur again. So keep that in mind. Completely just speculation for now. We will know after Holoride's done and more data is coming. The reason I'm telling you now is so you can plan ahead, right? Because if that is what's going to happen, after the Holoride release, we see a whole bunch more value come in, MEX goes up, EGLD goes up, well, then it's going to hit a top and it's going to consolidate. And when that consolidation happens, we'll probably go through a longer period of consolidation until we see more features and more trading pairs and things coming to the DEX. That's what's really going to drive the value up over the next year. So keep that in mind. As we see these things, I think we are going to have a lot to deal with as far as TA goes, so you'll get a lot more content from me, and I think we're going to have a lot to deal with as far as decision making goes. So start thinking about how you're going to make those decisions so you're prepared when the time comes. Okay, finally, we're going to look at the MEX chart. Okay, so the MEX chart is quite interesting as well. All right, so the cool thing about the MEX chart, didn't mean to move that. Let's lock that into place. Okay, so the cool thing about the MEX chart is, well, I don't see it available on TradingView yet, but the people over at arda.run, which is a pretty cool project, you should check it out for Elrond. They have created a chart, so they're basically, I assume, pulling in data via an API and using that to feed it into TradingView and create their own chart. Now, if we are creating this chart here, well, the first thing that we have to look at this chart is where did we start, what's our high, and where's our golden pocket? Because a golden pocket is really the main support and reversal level. If you fall below the golden pocket, that's a bearish sign. If you get support at the golden pocket, kind of like we're doing now, and then bounce off of it, that's a great sign. So we can go as far as 0.00758 in MEX price and still be within the golden pocket. Sometimes you'll even fall below the golden pocket, come back and hit resistance or trade within it, and then break out. So this is a very, very interesting area, but you got to take this with a grain of salt because there is so little data that this really doesn't tell us a whole lot. The only thing that we really see is that there's been a lot of sell-off. After initial buying when MEX was first released and people getting rewards, now there's been a good amount of sell-off, and due to the inflation, you have a lot of emissions coming out every week. But that emission is reducing. What people don't realize is that right now it's easier to get MEX because it's cheaper, right? You only have one trading pair. As you have more trading pairs and you need MEX to participate in them, well, the value of MEX is going to go up because people are going to want to buy MEX in order to buy other assets or to stake in liquidity pools for other assets or however they see fit within the DEX. So demand will go up as the DEX increases its trading pairs. That's just simple economics, right? It would have to. At the same time the demand's going up, the emissions per week are going down, meaning that less MEX is being created and it's going down. So that means you're going to start reaching a point probably during the first year, where if demand rises more than emissions, well then you're not creating as much as the demand coming in, and then you are going to be appreciating in price. Now, it's also very possible that as it reaches that lower emission, that the asset could actually become deflationary due to the burn of MEX during transactions. So we could see a multitude of things happen. We could see the demand rise, at the same time the emissions go down, and at the same time the burn rate could increase. So this could really become a deflationary asset after just a year or two, meaning that the time to accumulate is now when the prices are low and everyone's speculating, nobody knows what's going to happen. So it is a gamble, it's risk. It's one of those things where you have to decide, is it worth the risk or not worth the risk? Chart-wise, I like what I'm seeing, but it's very early to know anything for sure. We need more long-term data. What I do see is that we started off at around here. We went up so quickly that we were very overextended on the RSI, so we started to consolidate. Completely expected, right? We start to consolidate, and now we're getting support at the line where we're oversold. So we're starting to reach a point now at this golden pocket where, more accumulation seems to be happening then selling seems to be happening. So we're seeing support over the last 4 or 5 4-hour candles where it's kind of flatlined more than we've seen before. You know, you saw almost a reversal here at the Fibonacci, which kind of told us that this Fibonacci level is accurate. You also saw something similar at this Fibonacci level and at this Fibonacci level. So all these Fibonacci levels did show that we had some support on them. Now we're coming back down and we're also seeing support on the golden pocket. So these levels are definitely showing activity, which is a good sign. It could be indicating to us that this is accurate, but we just don't know enough yet. So still, make sure you're balancing your risk, do risk management, and make sure you're ready for anything to happen, you know? Personally, I plan to hold MEX very long term, so I'm trying to accumulate as much locked MEX as I can, and I'm trying to make sure that my liquidity in EGLD stays high. So I'm doing Denver, and now I've actually switched to just generating locked MEX because I'm going to take some additional EGLD and put it into liquidity. That means that I'm going to need more locked MEX to pair it with. So in order to do that, I'm just generating only locked MEX right now. And then once I'm ready, I'm going to pair that locked MEX with more EGLD to increase my liquidity stake, because the amount that you're earning is going to keep going down over year one. You're not going to receive as much interest in these than you are in these early days. So I know that this is the time for me to accumulate it. So I'd rather accumulate it now and then, you know, see where the price goes later. I have faith that the DEX is going to do very well because it has things that other DEXs don't. It's simply enterprise level. You know, this is an enterprise DEX. I haven't seen an enterprise DEX before. So the fact that it's an enterprise DEX with a scarce asset backing it, and then on top of that, a utility token that can, you know, become deflationary with demand and burn, with emissions already reducing, I think what we're going to see is that, you know, more than likely these are going to perform well. But still speculation, not financial advice. Who knows? You know, we don't know. It's just too early to know for sure. But I'm placing my bets on the fact that I think it's going to do well. So we'll see how it goes. We'll keep taking a look at these things. Hope you guys enjoyed the video. The first thing that I want to show you guys is this. All right, so I released a new NFT a couple of days ago. I released a new uncommon. There's still 16 available, so take a look at that if you're interested. And I also have a new one dropping today. So this is going to be the final NFT that's going to be strictly about Maiar. I wanted to have a few NFTs that were kind of commemorating the whole launch of the Maiar DEX, and this is going to be the final one there. We're going to start our next NFTs with Holoride. So check it out. Here's the trailer. All right, there. I don't know how to point to this thing, man. Right over there somewhere. Right there. There we go. All right, start. Oh, there it is. All right. So basically this NFT is called, what is it called? I can't see the video right now. This NFT that I created here is called Maiar Electrified. And basically what it is the Maiar logo. It is completely electrified. It is embezzled. It is embezzled? No. It is basically made so that it's not embezzled. It is basically, I don't remember the word. It's like embossed or something. Not embossed, but it's made so that the lightning reflects in such a way that it gives it the illusion of motion. So these are things that I find very interesting to do when I'm creating 3D graphics. So I hope you like that. I think it looks really cool, and I plan to have more. Now, a couple of things about my NFTs. The price has gone up a little bit because when I had the prices at like 0.2 EGLD each, they were selling out instantly. Like I would put them on, and as soon as I put a video out about it or put a Twitter post about it, they were all selling out. So I raised the price for the uncommons to 0.5 EGLD. The rares are going to be 1 EGLD, and I still haven't thought of what I want the price for the legendary to be, because the legendary, there's only going to be 1 in each set. 1 of 1 copies. Only 1 person gets it. For each rare, there's 10 of them. For each uncommon, like the one I released on Sunday and the one I'm releasing today that you just saw the trailer for, there's 20 copies of those. So this should allow a decent amount of NFTs to remain on my profile so people can come and buy them as they see fit, instead of people just buying all of them immediately. So I think that's a better way to go. It gives more people the chance to buy if they miss the video or if they don't see the Twitter post until the next day or something, because people have messaged me and asked me, hey, can you create an extra NFT for me or something? And I'm just like, I'm sorry, I can't do that. Like these are all going to be limited. So another thing to note is I'm working on building a website. That's going to be where we can track each NFT as we start building more sets in the future. And as Elrond starts growing in adoption, we will make this a formal project. Eventually, if it grows enough, I'm going to take it in directions that I'm planning for right now, but I haven't started to implement yet. And basically, eventually, I want to also release commons. Once commons come out, the uncommons and rares will be much less. So right now I have 6 uncommons in this set, and I have 3 rares and 1 legendary. So it's a total of 10. The next set will probably do 4 or 5 commons and then 2 uncommons, 1 rare, 1 legendary, something like that. So you're going to have a much less amount of rares and uncommons coming out as we move on to further sets, and as I start seeing how I want to exactly scale and make the NFT project a little bit bigger. Because right now I'm the sole artist, I'm the sole developer, and I'm going to need help on that to grow it. So I plan to do that, but not just yet. These are going to be the sets that if we keep doing this for the next 2 or 3 years, this will be the set, and the next few sets will be the ones that are extremely rare, because they're the ones that a few years from now, only a few people will have, and commons will flood the market. So we'll see what happens. Should be interesting. Let's see how it grows. But if you do want that NFT, the link is in the description. It'll be in the description for about an hour after this video is released. The people watching the video will have first dibs on this NFT and the one that I created on Sunday that is still available. There's still 16 of those available. We sold 4 of them, and 16 more remain. So if you want either of those 2, click on the link in the description, go to my Emoon profile, and you can grab yourself one. About an hour after this video is released, I'll post it on Twitter. So whoever watches a video gets first dibs. I'm going to keep trying to do that. That way the viewers are really the ones who get to pick them up first. And that's pretty much it. Hope you guys found everything interesting. We will catch up again soon. And thanks for joining me. Take it easy, plan, risk manage, do all those things, follow the news, keep your head about you. All right. Times can get stressful. Times can get crazy with hype, crazy with, new changes happening to projects. Just keep yourself calm. Have a plan. Manage risk. Your losses should never be higher than your gains. And if they are, you should have a strategy on how to recover them. You should have a plan on if things do drop. Just be planned out and everything will be fine. All right? Remember, nothing I say is financial advice. Use it only to help you. I could be wrong about stuff. A lot of times I am, a lot of times I'm right. There's just no way to know for sure. Anything I tell you in these videos should just supplement what you're doing. It should just help you make decisions, but it is never a decision. I'm not telling you what to do. I'm just telling you what I'm seeing. So that's kind of what we're looking at. I hope you guys enjoyed the video. Make sure you like, make sure you subscribe. I will see you guys again in a couple of days or sooner. Follow me on Twitter and then you'll see my posts every day. That's what you should do. But make sure you like, make sure you subscribe. Peace out.